experts. Ethereum ETFs launch won't rival Bitcoin ETFs. Viraj, Randev by Elena, Bozhkova. Last updated July 4, 2024 at 17:31 GMT. 4 minutes read. Key takeaways. Bitwise has updated its S1 registration ahead of schedule, with experts predicting a mid-July launch for Ethereum ETFs. The launch could lead to an increase in the Ether price, but it will not match the impact of Bitcoin ETFs. Experts anticipate volatility for Ethereum ETFs, reflecting the nature of the assets they track. The U.S. Securities and Exchange Commission approved the listing of 8 Ethereum-based exchange-traded funds, ETFs, on May 23. The ETFs are expected to start trading in July. After the launch, investors will gain exposure to Ethereum without having to hold the cryptocurrency directly. Bitcoin ETFs, which were greenlighted by the SEC in January, accumulated $54 billion in assets under management as of July 2. And ETFs are expected to underperform compared to Bitcoin ETFs, but the two offer essentially different value propositions for investors. When will Ethereum ETFs start trading? The SEC has approved 8 companies to launch Ethereum ETFs. These include Grayscale Ethereum Host and Bitwise Ethereum ETF, which will be listed on the New York Stock Exchange. Likely, 5 stars Ethereum ETFs will be listed on NASDAQ, while the Chicago Board of Exchange CBOE will list Benefit ARC21 shares Ethereum ETF Invesco Galaxy Ethereum ETF Ethereum and Franklin London's Ranking Ethereum PF. As required by the SEC, the funds have started to file their S1 forms, another layer of the approval process where the regulator examines the specific details of each ETF. The process can take several weeks, but a recent Bloomberg report suggests that it could be expedited so that the ETFs start trading by mid-July. If their price could rise by more, people are expected to buy and sell Ethereum as a result of the approval, which will likely shock the market price of the cryptocurrency. Chief analyst at Budget Research Ryan Lee told Crypto News that the intensity of capital injection into Ethereum ETFs relative to circulating supply will determine how the Ether price, currently at about $3,000, will respond. If the existing exchanges release their purchasing power, and the current purchasing power in the market does not shift towards it, the price could rise by 22.699 or push toward $4,724, Lee projected. If this happens, Ether's price may essentially return to the previous high. This calculation is based on the number of 13.4 million ETH held by exchanges, he added. From $145.52 since 4.67% 24 hours and D30 yuan time. Less impressive compared to Bitcoin's influence, whereas Bitcoin is widely recognized as a store of value, often referred to as digital gold. Ethereum positions itself as a socially innovative community. Beyond facilitating transactions without a centralized authority, such as a bank, Ethereum offers technologies that use the blockchain to address social problems. The Ethereum blockchain is home to thousands of games, applications, and social use cases. Ethereum also underpins non-fungible tokens, which are used to manage, share, or transfer copyrights on them. NFTs have led to greater publicity and adoption of crypto as they attract mainstream entertainment and other cultural creators. The SEC head of investments Mustafa Amin predicts that Ethereum ETFs will take a backseat to Bitcoin's historic ETFs run, which now have $54 billion in assets under management. We believe that the Ethereum ETF may be less impressive as the market cap or volumes of the Ethereum may mean more muted inflows when the exchange-traded funds are launched, he told Crypto News. Lee, the Bitget analyst, believes Ethereum ETFs could trigger a major market rally that will, nevertheless, be outlived by BTC ETFs' impact on the cryptocurrency markets. The ETF may not sustain the market for long since Bitcoin dominates the industry, Lee said. In any case, Ethereum will be competing with Bitcoin, which is another major hurdle that might make the market less potent. What are the risks of investing in ETFs? Investors buying into Ethereum ETFs should expect a lot of volatility because Ether is prone to price swings, analysts say. Bitget's Lee notes that the Ethereum exchange-traded funds will be as volatile as the assets they. Investors should keep in their minds that the fundamentals backing Ethereum today may change in the coming years, he explained. This is a major threat, as Ethereum adoption and dominance in DeFi may slow down if users prefer competitive networks. If this happens, Ethereum ETFs performance may follow suit. Ahmed, the head of investments at Base, noted the SEC shares restraint in approving the Ethereum ETFs. Remarkably, each funds pressured the securities regulator into approval through a series of lawsuits. According to analysts, Ethereum ETFs may slow down if the regulator refuses to greenlight future innovations meant to drive their growth. A case in point is the SEC's refusal to approve staking. Focus should also be on whether the tax implications on capital gains would apply to the ETFs that get approved. Ahmed added, regulation halts staking, dealing a blow to the ETH2. Over the past 2 years, Ethereum has moved from proof of work to proof of stake as a means of verifying transactions on the blockchain. The transition has been viewed as a significant victory for the environment, as proof of work required mining that consumed high amounts of electricity. In contrast, proof of stake requires locking away a certain amount of ether to verify transactions on the network, popularly referred to as ETH2. This transition has arguably reduced carbon emissions from Ethereum mining equipment by nearly 100%. However, in a setback for ETH2 enthusiasts, the SEC has not approved staking, questioning its structure as a security. A court victory by Grayscale initially pressured the SEC to approve Ethereum ETFs. Despite this, the regulatory agency doubled down on its resistance to staking, forcing Grayscale and 2 other applicants to remove staking from their proposals. Follow us on Google News.